Hello and welcome back to my Myrtle Beach Real Estate video blog, where I'm bringing you relevant topics about our local market here along the Grand Strand. Thanks for joining me. And today I'm thrilled to have Matt Richardson with me from Movement Mortgage. And so welcome, Matt.
Thanks for having me, Greg.
Absolutely. And today we're going to talk about Condotels. And you may be very educated on Condotels, but we found, especially in the last 6 months or so, a lot of people don't know the difference between a regular condominium and a condotel. And Matt is here to tell us about the financing side of that, which is important. But at the end of the day, a condotel is going to be a condominium that you can individually own. It's deeded property, but it's run like a hotel, like in a resort building. And for example, in Myrtle Beach, there's the Caribbean and there's Dunes Village and Vista up in North Myrtle. These are beautiful oceanfront resorts that have individual owned condos inside the building. There could be 180 owners, and you've got a front desk, so the consumer, the person checking in and checking out, it's just a resort, it's a hotel to them, but there is some unique financing that's necessary for this product, and that's why Matt's with us today. So Matt, why don't you tell us a little bit of the differences and why you have to use a specific type of, I guess, condotel program to finance this product. Maybe tell us a little background on why that is.
Yes, basically the primary difference between a condominium and a condotel is going to be the presence of the check-in desk.
Yes.
There are some other factors that can lead to a condotel classification, such as certain amount of commercial space in the building, but the primary thing is the check-in desk, like you would see at a traditional hotel.
Okay.
That check-in desk is typically what leads to not being able to offer a conventional loan like you would on a regular condominium.
Right, and that brings me to a thought. I have a lot of buyers that are coming in, and maybe they make an offer on my listing in one of these buildings, a condotel, and they have good intentions. They've got money to put down, great credit, and they want to use their hometown lender back in, say, West Virginia. Why could that cause a problem, Matt, when you get down to the closing table?
That's a very good question, and the short answer is the condotel product cannot be sold on the secondary market to Fannie Mae and Freddie Mac. The average buyer that you may be working with that comes into town, they may have an established relationship with their bank at home. They call their bank at home. The bank says, sure, we can lend you money on a condo in Myrtle Beach. What happens is after they receive the appraisal back, they figure out it's not a traditional conforming product, and their bank may not be willing to lend on it even if they have very strong credit, assets, down payment, etc., simply because their bank is not familiar with that product.
Yes, and my understanding and experience is that those loans end up being, they would have to be shelved, is what the industry would say, where the bank cannot sell it to the open market, Fannie and Freddie, therefore they have to keep it in-house. And these banks, that's not what their business plan is typically, and that's why Matt and his company and a handful of other companies locally have condotel programs, and we want to give that information to our condotel buyers so there's no hiccups on the way to the closing table. Everybody's in the know from the beginning. So that makes a lot of sense of what you just said there, Matt. If you have any other questions about the condotel concept, don't hesitate to give me a call. Remember, Matt with Movement Mortgage is fully capable of handling the condotel financing. So give me a call or shoot me an email, and I look forward to talking to you real soon.